guys, just want to catch up on boxes, breakout boxes, if you will, which can take our trading further. So we obviously have the zones, which I've explained, and as we get further through some of the content and obviously some of the live market content, we can actually solidify what's what. So from here onward, as you can see, we have the tip of the wick there, which is the ray, and then I put the box on to encapsulate where the bodies of the candles lay and also up to that wick region. We also combine that with the psychological levels. As you can see, 1.8850 right there is psychological level on the GA. So there's three confluences there which may magnetize the price. Markets opened on this chart Sunday evening, a mini gap higher, but nothing drastic. We're looking at this momentum, as I've already explained on previous time frames, to get pushed into that zone. Now, the small boxes, the breakout boxes, if you will, are quite handy. Obviously, we have our intraday hourlies on there too. The best way for me to portray the story of the hourlies is through more videos, live market videos. So we're going to be getting that as we go along. Now, the breakouts are quite useful, but for the breakouts, what we can do is on our tool, on our toolbar for the rectangle tool, we can set presets. Now let me just spruce this up a second. So here, style, this could be a template, and we could, so I've got breakout and arrange. I'm just going to delete those for a second. I'm going to reset that for you. So template, breakout, delete. Yeah, so we could set this color scheme. I always like to have the overlay as a black border. Then we come into fill, which can be whichever color you desire. Now what we can do, go into style, go to template and save as, okay? We can say box regions. Save. And we want to create one more preset, which we can change around. What I potentially prefer in this case is to take the color out of it and just have a solid color there, and then we can actually make this fat and chunky on the outside. With this one, again, you can go into style, border. You want the border to be full. You want the background to be 0, so you can even just take background out if you want. Template, save as, breakout. Bang. Again, we have time on the charts. We want to stay relaxed, peaceful, mindful of what we're actually doing. And shortcuts like that and just having organization can really assist us in our trading journey. So we have that. Now, deleting both of those. Going into breakout regions and ranges, there's specifics on how we can do this. So let's say over here on the Astro flip, we had the market break through, obviously over here where the lows were. It made the lows, obviously backwards chart. We broke through, okay, consolidation. We retested that zone as support right here, and then the market rallied. For precise, when we're looking at precision entries, we want to stick to the 4 hourly and then the hourly with this. Always start with the 4 hourly, and what we can do, we can grab our tool. If I can just maybe minimize the screen, fit that in there. We can grab our box tool, and what we can do, where we can see consolidation in price, very, very handy. What we can do, we can go from the bodies, okay, and we can go across. We just need 2 candles to do this. And again, this is going to take some time and effort to actually achieve, but we can draw the box region on there. So that is derived from 1 and 2, from the low up into the high there, okay? And then we have this breakout box region. That's one way to do it. I'll cover that in further detail afterwards. But the way in which I want people to focus on solely is going to be on the hourly. So we can stick to a very, very clean chart on the right hand side. We're not going to be using a moving average. The moving average is going to be the next video. But coming over to the left, coming over to the hourly, if I just expand this and use that concept. So the market, as you can see, we have this consolidation period. We have the liquidity the liquidity that was filled from this spike into the region of 1.8650 over on the right hand axis, which where the market is testing once more. And the market, boom, back above the moving average, and we start to settle. What we can now do is we can take, okay, look at the candles, look at the bodies, look at the wicks. We want to take more or less the high down to the low and bring that across. And we want to use this preset, which we've just set up, which is the breakout zone. We want the hollow box, if you will, and what we want to do with that hollow box is we want to now go into the market and focus on the finer detailing. Once the top-down stuff's already done, the regions, the spikes on the highs of the wick and the lows of the wicks using the horizontal ray tool. Once we have an idea as to where the market can go, on an intraday perspective, this is super handy. So we have one box region there. Next, we can see consolidation occurring. Candle 1, candle 2. The higher the wick, the lower the wick. So we can draw it from, okay, so we have 1 and 2 right here, and then we have 1 and 2. We want to go into and we want to draw a nice box region across the way. It just takes 2 candles, but if we can find consolidation periods like this, all the better, and then we can catch on to these breakout moves. What we can see here is that market came in, bound, rebounded, made a high, 1, 2, and then this candlestick, we breached the highs, we spiked through it. Market comes all the way down, creates a shooting star candle, and also engulfs the previous 1, 2 bodies. Then the next candle, as you can see, boom. This is where we can maybe use limit orders, if you will, and I will get to some of this in further detail. So when our bias is short, perhaps, or our bias is long, we can set a limit order a few pips below. Okay, sell limit in this case. Our stop will have to go above the back end, which we've already drawn the box on, and we can get ready for the market to fulfill our orders and shoot to the downside. Normally, we want a risk reward of 1 to 2 with this, so we have the highs at 79 and the lows at 36. So we're looking at around 43 pips, okay, and we're going to be going for double that, 86, but let's just say 80. So it's always a 1 to 2 risk reward ratio when we're trading the breakouts. Another example can be, again, focus on the fine details. We come in for the pullback. Look at where the wick has just retested. We retested the back end of this box zone. We can now go into drawing a box from the high of the 1 wick and down. So we have 1, 2, and then similar scenario. We have the breakout. Then we continue to go down and down and down and down. And all we're doing here, guys, is we're focusing on the art of, we need a sharp mind for this. And I'm going to do more videos on how I actually maintain my mindset and what I do outside of trading to actually implement into sniper mode. Okay, so we have the breakout. In this case, again, you can set the limit order, or upon the hourly break, if you have time at the computer, you can in fact go in manually and you can go, okay, cool, this is 8642. The lower end is 8584. We're looking at around a 60 to 70 pip box. Let's go for 120, 130 pips, and there we go. Or straight into the next region, the next psychological level, whichever you've marked up on the daily and the 4 hourly, we can drag that down into a nice perspective. Over here, once again, if there's so much going on. Over here, what we can see, we spike into the region of 8350. Okay, 1, 2, 3, 4, and then what we can do is take the wick at the high, wick at the high, wick to the low. We line our crosshair up to the 2 candles. Again, it just takes 2 candles to formulate this. Drag that across, mark it up nicely, and what we can actually see there is from the 2 candlesticks which are creating this fluff scenario where we've picked up the orders. So 8350 in itself is a psychological level and 1 confluence. We found the breakout boundary. 1, 2 on the wicks, and then the momentum was pushed up. We've retested that zone. That's why we always keep our stops on the opposite end, keeping our risk out the way, allowing the market to breathe, and then we're going for double the length of the box, or the height of the box. So we can even just do this if you wish. Copy and paste. Copy and paste, guys. If you go in and you go to the clone effect, you can build these bridges as we go higher and higher and higher, so on and so forth. Right here is a little bit different. We can approach this in a different manner. We can say there's the high and then there's the low, because again, we got used to the price structure. We are using our up. There's the high. We bring that down to the low right there. Exhibit A, Exhibit B. If I was to go in, and this is quite a handy thing to do as well, use the price label. Da-da-da, da-da-da. We have 8443, 8509, so that is, what, 66 pips? I'm reading all of this off the top of my head. My brain's on fire today. I've knocked out like 15 videos for you guys. I want to get this done ASAP. So yeah, you know, then what happens? Bang, we can translate that higher. So we have the breakout, and then we have, there's one stage, and then obviously if we go for a risk reward of 1 to 2, we add it to the second stage. Bear in mind, psychological levels, boundaries above and below, and that's how we can play it. That's how we can play it. So breakout regions, breakout zones are very, 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 very handy. Here, as an example, going forward, again, look what we're looking at on GA. 1.8650. 1.8650. So if we look at where the highs are, maybe over here, and then the low of this formation, because you can see by eye, and this just takes some time and dedication to actually grasp. There we go. I'm taking more or less from this here up into the highs. If we were to break to the downside on this, we could then wait for market to clear that region, that range, the consolidation, because remember, these are just small consolidation levels. What this looks like here, or the two-step candle on a smaller time frame, let's go to the 15-minute. Look at this, it's mass consolidation on the intraday time frame, mass consolidation, and then we get the breakout. But we don't really go into the 15-minute. We want to stay away from that domain because it can be a bit of a headache for many people. Alternatively, if this wanted to break to the upside, what do we have? We have, okay, there's a risk reward of 1 to 1-ish, and then a risk reward of 1 to 2. We could maybe follow this all the way up. And our original target anyway for GA, because we did some analysis earlier on, is going to be psychological levels of 1.8 or 1.8. 1.8800 or 1.8850. So then we can use this as a handy tool to come into the market to look for our entries, and we can combine it with the moving averages as well, and I will get to that as we get along. If you look at the USD CAD formations, over here we made the lows down here. We came through, we broke our resistance, and then looking for an entry on this. If you guys can see it, it's within that box there. So that's why we have to split the boxes up, zoom into the chart. Now we have 1, 2, and 3. These candles are quite specific. They look like dojis, they're indecisive, they're picking up orders. As you can see there, spike to the low, spike to the low, spike to the low. Over here on our Astro flip side, we can see also what exactly is going on to give you guys more confidence in actually holding this long trade, because you're now looking at a shorter bias over here. Again, we're bringing the two hemispheres of the brain together, combined. So what we can do, 1, 2, 3 candles, we can go from the high here, and we go from the low, so the low up to the high. And then look what we got. We got a huge breakout candle. A huge breakout candle forming. Again, in this scenario, it'd be good to actually set the orders there, because once we set orders above and below these zones, once we have the bias, like a buy limit, a buy stop order, stop loss below, as you can see, it'll fulfill that order instead of us trying to get in at the highs where the risk reward will no longer make too much sense. Going from there, if we do a risk reward of 1 to 2, we can see that if we add the boxes on, it comes more or less into our region, which is right there. And again, we can hold this on the short side perspective, looking at the Astro flip chart here on the right. So there's another breakout opportunity. Another one on dollar CAD. Now that's the 4-hour. I just wanted to mark up one more 4-hour, which could be, okay, the entirety of the range, which is from the high into the low, consolidation, and then as you can see, we're actually breaking out of that 4-hourly now. If you went on the 4-hour and the scope, the scope of the 4-hour, taking that into consideration, boom, there's a risk reward of 1 to 1. A risk reward of 1 to 1. If I go into the hourly and then I just break the chart up a little bit, indecisive, we're dipping into nearly 3,250, just a pip shy off. What we can then do, we can zoom in, guys, and we can look at this market price and what's actually going on. We have the high into the low there, or maybe even the low into the high. Again, takes practice. Every scenario is going to be a little bit different, but that would be something that makes sense to me right there. We have the consolidation in between. We are waiting for a breakout in price. The market is throwing spikes 1, 2, 3, 4, 5, 6 to the downside. We have a huge breakout candle above. There's your entry. We don't really have to necessarily put our stop on the back end of this. We have to adapt to the market condition. We could maybe go midway because we can see spikes are being thrown down, and also it's combining with the market breaking above the moving average, the Astro EMA, and then we're spiking off. And the next video, the moving average video, will clear some of that up for you. Once you have all of this and you've gone through these main videos, all of the live market exercises and the webinars, we can clear many of these other things up. Over here, we can see clear consolidation. We can maybe even go from the highs, okay, highs at this point, or better still, look at this. This is where, like, we're in the jungle now. We're in the jungle. We're going from here across to here. Market breakout, there's your buy opportunity. We retest the zone, and then we're in profit. So very, very specific way on how to trade the breakouts in alignment with everything else, keeping the charts clean. And over here, for instance, we're consolidating. We have the high into the low, breakout region. We have spike to the high, right off the back end of 1.3450. So liquidity is coming in, swing, swing, swing. We have that zone, and we also have this zone. We could even maybe bring this whole thing across, or better still, right there. Okay, that's a false breakout, comes back into the region, but it continues to slide. We bring that across. Then we have this here, spike to the high. Entry could even be after the closure of that candlestick there. It's closed less than like 45% of the original up move. Liquidity spiking into the highs. We're getting also maybe mini intraday intraday trend line that we can slice on there as another confluence. Break below, spike back to retest, and then we start to swing again, and then we come back into this little region there. Another breakout opportunity to the downside, and so on. So all of these intraday moves, the money is all here for us. We just have to be on point and aligned with ourselves. When I say aligned with ourselves, we need to be mentally balanced and stable on these charts, and just go for and be patient. You only want to go for the high end moves. Over here on the 4 hourly, if I just replace that box now, what we can do, we can go from the highs into the lows. Highs into the lows. We know that 1310 is massive support. We're above the moving average. Spike to the MA, spike to the support, spike to the MA, spike to the support, spike to the MA, nearly at the support. Psychological level I've already explained, and then now we're looking to actually break above the box and go beyond 1320, 1326. Alternatively, on the hourly, we can maybe even align that up with the psychological level. We can consolidate. If it was to reverse this week, because things could change, break to the downside, and we can take it to 1305. So a little introduction into the boxes. I'm going to be covering that in more detail and giving you more and more steps to actually make this a success for yourselves. And yeah, mainly it's going to be on the hourly time frame, to be honest, because it's an execution strategy. So the execution strategy is going to be the box breakouts, a lot more wisdom in terms of where to get these rebounds from. And if I look over here as well, here's an example of a couple wicks. Bang, the wick coming into 12.95, breakout to the upside. So what we're doing is we're trying to encapsulate the price, use it in our favor, separate the charts, keep the charts clean. Chart hygiene video is coming up soon. And we'll go from there and continue to crack on and share all of this knowledge and wisdom.
I just want to go back.